This is Robert Kraft, and I'm your host for the Planet MicroCap Showcase Virtual Investor Conference 2020. And joining me right now is a panel that's going to be hosted by Andy Kyzyk. He is the Senior Vice President at OTC Markets Group. All of us at Planet MicroCap Showcase are so thankful for OTC Markets to be a sponsor of this year's event. And we're very excited for this panel titled OTC Markets, Navigating Liquidity, Quality, and Success, the Long Game. So with that, Andy, please take it away.
Thank you, Bobby. I want to thank Planet MicroCap for hosting the conference. I want to thank our participants and panelists that will introduce themselves in a minute. First, I would like to just turn it over so everybody in our panel can get acquainted with you and just give a brief introduction, starting with Sebastien.
I'm pleasure to meet you today. I'm Sebastien Pare, the CEO of VIQ Solutions. This title, as far as the panel, is really a reflection of what we've gone through over the last couple of years. So I'm absolutely delighted to be part of this panel and get everybody's feedback and just share with everybody listening today what our journey has been in terms of the long game. VIQ has been quite a remarkable story lately. We still have a lot more work to do, but I'm delighted to be here today.
Thank you. Laura?
Hi, my name is Laura Kiernan. I'm the CEO and founder of High Touch Investor Relations. I work very closely with VIQ Solutions in developing their investor relations strategy and helping them execute the strategy. And I've been working with them over the last year, a little bit more than a year, while they've made their journey through the capital markets.
Thanks, Laura. Stefan?
Hi, Stefan Spath. I'm with MicroCap. We are a market maker, and we use the OTC Markets platform to do 100% of our trades. For us, primarily is non-U.S. securities, but we also trade domestic securities. And in addition to that, we are one of the approved sponsors for OTC QX and QB.
Great. Thanks for the quick introductions. Just for everybody's benefit, OTC Markets operates 3 marketplaces: OTC QX, our best market; OTC QB, our emerging venture market; and OTC Pink, our open market. We make markets in over 10,000 global securities. We trade through our SEC-regulated alternative trading system, OTC Link, and OTC ECN, OTC Link ECN. We connect a diverse group of and a network of regulated broker-dealers that provide liquidity and execution services. We enable investors to easily trade through the U.S. broker-dealer of their choice. For corporate issuers, such as VIQ, which is listed on OTCQX, we help both domestic and international issuers connect with U.S. market-seeking investors exposure by empowering companies to distribute their quality disclosure across our platform. OTC Markets also provides a great stepping stone for issuers who wish to move up to a national exchange. So through that introduction, I wanted to kind of jump right into our panel because VIQ has been quoted and listed in our market for a few years. Gone through some, they started out being quoted. Their home market is on the Canadian exchange, the TSXV, and they became quoted in August of 2018 in our market. And Sebastien, the company went from quite a jump from about 16 million to about a $50 million company. Would you take a few minutes and explain to us your journey in navigating as a public company on OTC markets and what that's meant and some of the challenges and ideas you had to face in getting there? So I'll turn it over to Sebastien.
Thank you, Andy. 10 minutes to go over such a short and complicated topic is really a short window, as everybody will appreciate it. But first of all, before I get started, thank you, Andy, to you personally. Thank you to the OTC Markets and Planet MicroCap for inviting us and me personally to join this panel. So I'm really happy today, hopefully, to share some of the lessons learned about how we've been navigating and continue to navigate our journey, and how for us, VIQ, and me personally, it's been truly a long game. So let me also tell you about our investors relations strategy, what has worked for us, and frankly, the twists and turns we've taken along the way on our journey to create value in the capital market. If I could leave you with 3 things today, those will be the following. First, you must start with a very clear vision and how you plan to create value over the long term. Second, you need to lay out the company's financial and investors' relation strategies for the journey and maintain flexible thinking along the way. Have a path, but be very flexible. As I like to say, IR is not an art, it's not a science. It's about taking the right step at the right time. And third, we are where you are on the operational cycle. That will impact the investors' relation strategies you decide to execute. For us, this was the key in getting a good return on the investments in investors' relation. So I only have a couple minutes today. This is a never-ending discussion. So let me try to take you what we've gone through over the last, I will say frankly, 4 to 5 years. Basically, from my perspective as a CEO, always start with a very clear vision and how you want and your board plan to create value over the long term. At a fundamental level, everyone will tell you the company has to perform, and Andy has been very consistently reminding us of that. And they're right. You have to grow the top line, expand your margins, generate positive EBITDA, net income, and earnings per share. Not so easy, absolutely not. The words the company has to perform meant different things to different people at different times on our journey. I joined the company in 2015, and during that phase of our journey, we call VIQ 1.0. During the 1.0, we developed a strategic vision, one that we believe will create a significant shareholder value by growing the top line, expanding our margins, and generating EBITDA over time. Here's the secret. A long game, it's always been our focus. Otherwise, you'll never make it through the tough cycles ahead of you in your company. In fact, in our case, we needed 3 to 4 years of significant investments before we could sustainably and with some reasonable predictability grow our top line, expand our margins, and generate our EBITDA. For all the CIOs listening today, how do you get through 3 to 4 challenging years of investment, negative EBITDA, negative net income, negative EPS, before your investors see the light at the end of the tunnel? You can have the greatest IR plan, spend a lot of money, but if the fundamentals are not there or the timing is not right, that plan will not return the results. Any good results will be very short-lived. Great for a quarter, as we used to say, and then what? The long game is what matters to me and what has mattered to VIQ all along. We're building a technology stack, a financial engine to last and have an impact in our markets. It's not been an easy journey. For VIQ, that meant the following, couple lessons learned. Find the right long game private investors early in our journey and focus on alignment with the board and the management really early. Raise your own private capital through your own network. A must-have, in my mind, a must-have skills that will pay off later in the IR journey. Board, friends, and family capital raises are not enough. Investors back people they know and they trust. All board and advisors and management must own shares and think like shareholders. The next phase of our journey is what we've called VIQ 2.0, or the investment phase. This is when we invest in our technology, our A+ team, and the infrastructure to transform the business. This transformation differentiated us, and enabled us to stand out, I believe, in the capital markets. Our plan was to transition from what was historically about $7 million in one-time revenue contracts to what's now about $37 million in long-term recurring revenue contracts. It was to gain the market share and double our gross margins from 28% in 2018 to almost 55–60% by the end of 2020, over time on the back of our technology stack. The investments we've made in the technology, the team, and the infrastructure set up on this path. This was a challenging time to do investors relations, and we really had to focus strictly on the strategic long-term private shareholders who were 100% aligned with our vision and literally cut off all the noise from all the other sources. At this stage, the key was to communicate frequently with all the shareholders. And as my board will say, let them touch and visit their money. Our stock suffered during this time, but I have to give everyone on the private side a lot of credit who stuck it out with us and could see the light at the end of the tunnel. This was not a time for us to make significant investments in investors' relations the way we needed to when we got to the next phase. It was not an easy journey. Once the major technology infrastructure investments were made, we were ready for the next phase of our journey. This phase was called what we call VIQ 3.0, or our roll-up and the market recognition phase. This was the time for us to hire a professional IR team like iTouch and get to work on a broader IR strategy. At this time, we had a lot of things in place, but the market had not caught on to our journey. Remember, until that phase, we had very little IR outside of our private inner circles. We were trading at less than 1-time multiplier of trailing 12 months revenue, where our peers were trading at 5 to 6-time TTM revenues. So we knew there was a significant amount of value that was not being recognized by the street in our valuation. Our long-term game investors knew, and it will take time for the market to catch on. And they understood that because we spent a lot of time touching base, keeping them well informed and fully informed along the way, giving them a sense and touch the money, as I said earlier. A happy investors, in my mind, is a very well-informed investors. During this roll-up and market recognition phase, we put a lot of effort towards cleaning up our cap table. Let me tell you, last fall and winter was a scary time for us. And Andy and the OTC markets are fully aware of what we went through. We knew there was a considerable amount of risk involved in cleaning up our cap table to a reverse split. I don't even want to tell everybody on this call what the risks were. Ultimately, it was approved by 99% of the shareholders, and the vote was led by our strategic long-term, long-game, fully informed shareholders who understood the need of the next phase of our journey. But we knew we had to do that in order to upgrade from the pink to the QB and then to where really we wanted to be, the QX, the best market on the OTC. It was part of a long game plan. Also, to clean up our cap table, we added some liquidity. We announced the conversion of our debt to equity and call our warrants. Both actions helped take our outstanding shares from 10 million to about 18 million shares. This helped with trading liquidity. And our panel expert here, Stefan, will probably speak to you about some of those as well. Also, during this time, we executed our plan to invest in acquisitions. Our strategy involves a roll-up, and we've acquired 5 companies in the past year and a half alone. This was part of the strategy, which was critical to gain scale and margin improvement. These actions all required substantial planning and foresight to ensure shareholder support, welcomed by the capital markets at the same time, at the right time, and provide the capital when we needed the most, when it was time to initiate the roll-up. We're very thankful to Andy and the OTC market who supported us throughout the process along that step. We plan to continue our journey, and we will evolve our IR strategy to match our operational circle. It's not a secret, as Andy mentioned, that we have desires to be on NASDAQ one day. Part of our journey is spending a few years on the OTC, building and reinforcing our investor base so that when we take that leap, and we know that we will have sufficient support going into NASDAQ and after we first launch. In hindsight, it's all easy. Like the path was very clear. It was not at all for VIQ. One of the toughest things we've ever accomplished. You must have it very careful about how you're being influenced by what investors and bankers are telling you to do. Having a long-term vision or strategy and execution against it, it's really what's best for the long game. Chasing visibility after a good quarter is not. Similar to the Major League Baseball. In my mind, we like to say at the board level, there's no shortcut for a growth company like VIQ to get to NASDAQ. The most difficult feat in sport is hitting a 90 miles per hour round ball with a round bat in under 1 second. Basketball great Michael Jordan tried professional baseball but could not hit the ball. Why? Because his eyes could not pick up the spin on the pitch. Why? Because he had not developed that skill to the major league level from years of experience in minor professional development leagues, the A, the AA, the AAA leagues. Likewise, public companies like VIQ can make it to the big boards like NASDAQ. But I frankly believe that only after they successfully progress to the OTC levels with muscle memory intact and physical coordination to hit the 90 miles per hour ball. This is how much we value the long game, the OTC, and our approach to the next level. Andy, now I'll pass it back to you, to the other members of the panels. It was short, but I think at this point, I kind of set the stage in terms of how we approach it. Thank you.
Thank you, Sebastien. That was a really nice piece. As you talked about your 3.0 version, I wanted to just ask you a quick question before we turn it over to Laura. The question I had is how your marketing budget and expectations on its ROI played a role in your development as you went through your 3.0 phase. I mean, you've been going through pink to QB, and then all of a sudden from QB trying to get to QX. How did the role from the CEO and executive level play in terms of managing a marketing budget in your ROI? And then after you do that, we'll turn over to Laura in a second if you want to give us a snippet on that.
That's a great question, Andy. And I'm smiling because it's a never-ending discussion at the senior level, particularly between me and the board. The bottom line is it's a never-ending journey, and obviously something that we've considered spent a lot of time over the years. But the bottom line is we believe it's very challenging to basically measure investors' relation. But in my mind, this is not something a company could accomplish on its own. You might, but it will take you a very, very long time, particularly as you're trying to build a business and focus on the growth and listening to everybody reminding you that investors' relation is tied to execution. So once you understand the premises around that, you need all the help you can get at the right time. So from our perspective, one of the things that we did with Laura at iTouch was spending quite a bit of time early on towards an 18 to 24 months strategic plan, and then roll it back from there. The other thing we spend is a lot of time on how do you measure success? How do you measure for $1,000 going into something that the return will be there? And for us, really, whether or not it's the right conference, a separate conference, whether or not it was the right investor to speak to at that time, my view is you'll never really know exactly what's going to happen in a public market. But one of the things that we've done, and Laura probably will talk to you about it, is to lay out, what we call the relative value of our enterprise value, using what we call very detailed comparables. So we knew going in what our potential value could be if we do the right thing. Then it was a matter of assessing whether or not there was a gap. And obviously, I'm pleased to report today, and that's what we're delighted to be showcased on this panel. But our approach to the relative valuation as a way to measure your investors' relation has really worked out well for us. It's an all-encompassing way to assess all the different moving parts into it. And frankly, it's been the best return on the investment measures that we could come up with. And it's something that I work with the board on a monthly and quarterly basis. And it's all about tracking yourself against that plan and making sure that you're focusing on the right thing at the right time.
That's great. I like the idea of discipline and vigilance, exercising the process. And that's a nice segue to bring me to Laura. Laura, as an investor relations officer, as a seasoned IR advisor and the advisor to VIQ, and running your own firm, can you talk a little bit about the path and challenges and ever-shifting choices of working with a MicroCap and how that might be different than working with a seasoned company? But I want to turn it over to you and share your experience on that.
Sure, and I also want to thank everyone for having me on this panel. It's really an honor to be here. So thank you, OTC Markets, thank you, Planet MicroCap, and thank you, VIQ, also for letting us do this. I have been in investor relations for more than 20 years now. I have worked with a variety of large cap, mid cap, small cap, and microcap companies. I will say that microcap investor relations is unique. It is different than more traditional, I would say, even smaller mid-cap investor relations. The path you take is different. It's because you're not just dealing primarily with institutional investors and established bulge bracket firms. You're dealing with a lot of high net worth brokers, family offices, and even the retail segment of the investor base. And then on the banking side, you're working with more mid-level banks. So you have to be so creative about how you go about doing investor relations. And every story is unique. So what we did with VIQ, which is what we do with all of the stories that we work with, is we looked at it carefully and we said, this story is at a pivotal moment, which presents a really breakout opportunity for investors. The thing is that we could see that based on the relative valuation, and I'd like to show you the relative valuation in a moment, but based on the relative valuation, that the stock was undervalued as long as it would perform based on the projections that we knew were out there. So let me just show you quickly, if I could, what we were dealing with. So I'm going to share my screen briefly here, and I'd like to just point out what we did was we looked at the equity, and at the time it was trading, as Sebastien said, around 0.8 times latest 12 months revenues when we looked at the total enterprise value, which was, you know, $20 million or so dollars. This was about a year ago, maybe 15 months ago. And we said, well, we think the story should actually be trading at a much higher level. Let me get to that page. We think that the stock, based on a relative valuation, should be trading more at 5 to 6 times latest 12 months revenues. So this chart here is actually my scorecard. When I met with the board early on, the board of VIQ Solutions, and they said, well, this strategy is great. It sounds like it's going to work, but how will we know that it's actually working? And I said, well, the way that you know that it's working is that we should see on a gradual basis the relative valuation moving up. So when we started about 15 months ago, we were at 0.8 times LTM revenue, and you can see that wasn't even close to any of these others. So we knew for sure that we were undervalued. But how do you go from 0.8 to 5 or 6 times? You put a plan in place. And what we did with VIQ Solutions was we set up you know, a variety of strategies and tactics, which we would do for any microcap, which would get new investors into the story, tell the story in an impactful way. And then over time, we would see that manifest in the valuation. And so we did see this gradual, it felt very slow at first. And the reality is that you can't really see, even in 6 months' time, the real impact on your equity. But things are happening in the background. We could see things like, oh, well, 3 months ago, it was very difficult for us to put together a full day roadshow in New York City. But as time passed and we were cultivating investors, well, the next time we tried to do a roadshow in New York City, we were able to get a full book. And then gradually over time, we started getting into more and more conferences and meeting with more and more sell-side equity research analysts. At first, we had to sign up for paid-for coverage, which we did with Zacks, which was great. It was really good to get us started with sell-side research, and we needed it. But we've more recently been cultivating banking relationships so that we get research that we don't pay for. And so all these things have been able to allow us to increase our visibility and you know, gain fair value for the stock. So we have seen the stock today, the enterprise value is up to about $58 million, which is great. So with that, I would like to pass it back to Andy.
Laura, that's great. Thank you for talking about the details, because there's a lot of challenges in being creative, you know. I want to take a pause and go over to Stefan for a minute, because we talked about the company, we talked about the discipline and vigilance of what a company needs to do with a vision in the long term. We've married an advisor. Let's talk a little bit about the market. Let's talk to MCAP a little bit. And Stefan, as a market maker, an advisor, a registered broker dealer, before we kind of get started, for the benefit of the audience, I think it would be helpful to understand. Can you explain the role of the broker dealer quickly and the role of a market maker, and maybe how do you trade and settle a share? And then we can kind of move over into a little more detail about the security and a little more about tradability. So just for the benefit of the
Sure.
audience, and what you do and what you don't do, how you process order flow rather than work for the issuer, maybe a little color on that.
Sure, I'd love to. And by the way, thank you for inviting me to participate in this panel. I really enjoy these, and it's an honor to be here. So MCAP, formerly Madison Capital, we are a market maker. So as a market maker, we are legally a registered broker-dealer, and we are one of the key market participants that are behind the scenes in the over-the-counter space. So we essentially are Andy had mentioned a national exchange earlier in the discussion. So everybody is familiar with the photographs they see of a national exchange floor, where you see a person in a kiosk who's essentially ordering or trying to manage an orderly marketplace. The market maker, that's called a specialist. The market maker is the counterpart to the specialist in the over-the-counter space. So we essentially do the same thing. However, we are highly decentralized. We are across the country and across the world, as opposed to on a exchange floor. MCAP is one of the market makers that is highly active in the QX, the OTC QX and OTC QB issuers, because we have found ourselves drawn to that segment of the over-the-counter marketplace for a variety of reasons, which I can expound on in a few minutes. But again, to go back to what is the role that we actually play, the role of the market maker in this space is to ensure an orderly marketplace. So as, in this case, a non-U.S. issuer applies and is accepted to the OTC QX and OTC QB prior to this, we are there to ensure that the trade flows, once you generate the interest in the shares in the company, by having an IR campaign, having a well-coordinated plan of attack to locate, identify, and reach U.S. investors. Once that activity starts to become actual trade activity, and we see orders routed through the major broker-dealers around the country from retail investors who are sending their orders to their broker-dealers, who then aggregate those orders, they all get funneled to a market maker, whether that's us or one of the many, many market makers in the space. But there are some that are much more active in OTC QX and OTC QB than others, for a variety of reasons. And so once those orders come in, our traders are there to ensure that it is an incredibly seamless process, as if the domicile of the issuer were irrelevant. It doesn't really matter. If you have an investor in California or in Texas or in Connecticut wanting to buy an OTC QX listed company, they can effect a trade seamlessly through their broker because of the framework and the actual platform that OTC Markets has created with OTC QX. And so that really benefits multiple parties. It benefits the U.S. retail investor, first and foremost, because it removes all of the obstacles that were in place before this platform were available to them. It has a benefit to an issuer, because an issuer now has the ability to have a direct access in a much more clearly defined path to prospective U.S. investors. It also has a benefit for participants like market makers, because it gives us a platform to interact with our competitors, to have a competitive process to allow for a more orderly marketplace, and that is as a result of the competition, the healthy competition, which allows people to compete for order flow and to compete for the activity in the space. And essentially, that's kind of a summary of what we do. But in order to keep it in a way that doesn't get into too much of the technical jargon, that's basically the overall 30,000 feet perspective. But you also mentioned and asked about settlements. So let me speak on that briefly. When it comes to OTC QX and the market makers that participate on that platform, market makers do it differently. And I can't speak for all the different market makers, because how they operate within the space may be a function of different variables, such as the level of their capitalization and whether they're able to carry positions overnight in order to sell positions in foreign markets, whether they have the ability to transact in the foreign currencies that the issuers are denominated in their home exchanges. All these things have an impact. As far as us, we are a 24-hour desk. We transact and quote over 3,000 securities. We are highly active through our relationships in local exchanges with local brokers or counterparties in different markets. And so that allows us to have a very seamless approach. When it comes to settlement, when a U.S. investor decides to buy a non-U.S. security that is quoted on QX, they will have information that lets them know where the home market is, the information that's reported in the local market is all available on the OTC Markets website. But the actual process of trading the security is identical to trading a U.S. security because of the platform and because the ability of the market maker to access the local exchange, buy securities for delivery to the U.S. investor. So it's really just a process of removing obstacles, simplifying the settlement process of a foreign security, and removing all the things that made trading in non-U.S. securities difficult prior to these platforms being introduced to the marketplace. Does that kind of touch on what you were asking about here?
It does. I think that, you know, in the role of a broker, you're really trading order flow in terms of where it comes. It's not a representation of working for the issuer. It's more of a capacity to marry and keep an orderly market with competing interests of the market. One thing I did want to ask you is, I hear a lot from a lot of companies that, you know, securities, you know, aren't liquid. Could you tell us a little bit, and we hear, oh, there's not a lot of volume, it's not liquid. I'd like to really get a little clarity from you on liquidity versus a lot of volume and the ability to execute a trade. Could you just tell us a little bit about that? Because a lot of companies have always been asking me, we're not liquid. And is that really a function of volume, or is that the ability to trade a share when the price is in line with the instruction from the buyer or seller?
Right. That's a good question. Let me try to approach that in a few different ways. The distinction between volume versus liquidity. If an issuer, or in this case, if there was an investor who was curious about acquiring a foreign share that appears to have no volume on the tape in the United States market, that can be confusing, but that's hence the distinction. Liquidity is the ability to actually buy a security, whereas volume obviously is the visible amount of shares that are traded. So there is some technical aspects that could obscure the picture that I think are probably the origin of some of the confusion. When we are dealing with a qualified foreign exchange, which is one of the requirements for an issuer in order to be accepted to the QX platform, and one of the qualifications that we look for in order to have the ability to trade efficiently, if that is in place, if a company is listed and in good standing on a qualified foreign exchange, we have absolutely zero obstacles to acquiring shares locally and bringing those to an institution or an investor that wants to acquire those shares. That's liquidity. It's removing obstacles and barriers to buying the security. Whereas volume can be recorded in different ways. For instance, there are examples. Canada may not be an example of this. I'm talking about some other markets in other regions of the world where if we effect a trade for security that may be based in an emerging market, that volume will be reflected in the local market, but it may not be reflected in the U.S. market because it's all dependent upon whether the market maker decides to settle the trade, cover the position locally or domestically with a competitor. And so it's kind of obscured. And so what as our role also in addition to a market maker, as an approved sponsor for QX and QB issuers, one of the key elements that we discuss is that when you're looking to measure success, and if we define success as how do we expand our shareholder base into North America, Volume on the tape is only one attribute you would look at, but it doesn't give the full picture. There are other things that you would have to look at to determine whether or not the quotation on QX has been a success. And that's just a reality of the marketplace, but it's something that can be explained and something that can be proven if you were given the opportunity to discuss these kind of quirky realities about how cross-border transactions are recorded.
So are you chasing parity with Canada? And is it fair to say that when a company is listed in the US markets, for example, on QX, the information flow comes to investors who then have the choice of execution? Maybe you can talk for a second about parity, pricing, tightened spreads for the benefit of the issuer, because I think that this is always a big question for a lot of corporate issuers to understand.
Sure. Specifically for Canada, or do you want me to start on a global view and narrow down
I think
to Canada?
TSX v Canadian markets, US markets, since we're in the same time zone, and one feeds the other for what we've seen as local markets grow in liquidity as well.
Right. So you hit the nail on the head with that one. The fact that we're in the same time zone is a very important point. So our traders who are operating U.S. market hours, we are receiving order flow from U.S. Institutions, and our customers are primarily all institutions. We're a wholesale market maker, but behind those institutional trades, obviously, there are broker-dealers that have retail clients, and orders are routed to agency desks, and those orders are routed to the market maker who is the best bid and offer at the time. And so with us being in the same time zone, that creates even more efficiencies because we don't have to factor in issues such as foreign exchange fluctuations during non-market hours, the possibility of having corporate-specific events occur outside of U.S. market hours that would generally cause a U.S. market maker to increase the width of the spread in order to account for any potential issues with volatility. There's also general economic factors in the event in a globalized world like this, when the U.S. market closes and you are selling orders for U.S. customers that want to buy foreign securities, but you have another 24 hours, 12 to 24 hours before you could actually actively access a local market to trade securities. Being in Canada is almost as if it's a borderless transaction. There's no frontier because of the ease with which U.S. investors can trade Canadian securities via the conduit, which is a U.S. market maker. So it's a complete. Over the course of the past 20 years, particularly with some issues related to settlement and clearing, that the process has become so seamless that I would imagine there may be situations where a U.S. institutional investor or retail investor could buy a security that's a Canadian security and not even realize it's a Canadian security, simply because of the fact that it has a U.S. ticker symbol, it's quoted in U.S. dollars, and it has all of the information that is required to maintain good standing on the QX marketplace. So it's become a whole new world as far as what we've seen now versus earlier. And I also have been involved in this space for just over 20 years in exclusively non-U.S. securities that are traded over the counter. And what we see now has really been a sea change in how things have evolved.
That's great. And the reason why I wanted to get into that a little bit is because one of the perceptions that corporate issuers have is when they're cross-listed in two markets or cross-quoted in two markets, they say, why am I not trading a lot in the US? Well, you're probably having an order that's being executed. So I think at the end of the day, issuers can see that as the pie grows, it can grow in either market. But the point is that it gives the US an investor base more opportunities to analyze, value, and trade that security, and their broker can route it to either market where the best price can be had. So it grows the pie. We've had a study that was done, and the study found by OM, Oxford Metrica, indicated that when there's a company that's quoted on QX as a secondary market, home market activity rises over 20%, but also US activity rises too. So you're driving more order flow with competing investors to get into your stock. And when we saw what Laura was talking about earlier on the relative value chart, they were nowhere near their multiple. So now all of a sudden you're starting to gain interest. And, you know, one of the things I wanted to come back to Sebastien a little bit is you talked a lot about having openness. You talked about being creative, executing your strategy. One of the challenges that you mentioned earlier is that you took your time and you're very tempered in your approach to be disciplined and vigilant about going through the tiers. I wanted to ask you a question. Can you elaborate? And you talked about earlier about navigating bankers and everything. You know, why you chose to navigate and stay on the OTC markets, and what were maybe some of the boardroom battles and staying on going from QB to QX versus jumping up to NASDAQ? Maybe you can give us a little color on the inside, because this is a common question, getting to the exchange too early.
Yeah,
please.
Yeah, that's a great question. And I've been listening very carefully like everybody else. So from our perspective, again, I'm building a business. We're building an enterprise. We're building an enterprise to last. And everybody out there will agree that building up your fundamentals and making sure that the execution comes true as expected dictates at the end of the day any kind of results we can be looking at. So we took that to heart, and it was not easy, Andy. I could tell you a lot of patience. Laura witnessed some of those battles in the boardroom about taking our time, and I apply it very differently. I know what those steps were with the OTC, and I remember the pink, days, and then the QB days. And for me, really, it came down to, in order for us to qualify for the QX, and Andy, that's credit to you and your organization, but there was quite of a compliance assessment that needed to be dealt with before we can even begin that process. So we took this process, like any other internal audit, as seriously as we should be. And we wanted to know on that scoring, on the 19 different criteria that the expert at the OTC will be looking at, where does VIQ stand? And to Stefan's point, it's not one thing. It was actually a basket of about 19 different variables, liquidity being one of them, volume being one of them, cash at hand being one of them, and you name it. And it was overwhelming at first. And when we put the effort into that process, we realized that when we came up with the scoring that we came up with, then we needed to go to the next level. And if you remember, Andy, it was a lot of experts involved, from bankers to lawyers to accountants to IR specialists. What comes next? And for us, it was on the back of the qualification assessment with the OTC QX, where we really wanted to do that. Okay, what else do we need to do in order to make sure that, as I mentioned in my opening, we build the muscle memory, we build the discipline internally. My biggest thing is, to my shareholders who've been trusting me now for 4 or 5 years, is what we're going to say at one point, we will find a way to execute on it. So the worst thing we could do, and Stefan mentioned that a little bit, is to go too early and make the wrong move. So for us, it was all about using the OTC to the best possible extent, make sure that we built an organizational discipline, and then basically once we got that sorted out, including the cap table and everything else, then the OTC QX was the next level in terms of, okay, we are now on the best markets. We now have earned the right to be there. So now it's a matter of really going as hard as we can to start making our move towards the kind of next level of shareholders that Laura was referring to. And I think we've been able to accomplish that. If you look at our volume, we've not shared yet with the auditors, with the listeners today, the volume, but between the OTC QX and the TSXV and the number of exchanges where we're now being carried forward as a listing, plus the volume that has got into it, it's quite remarkable. And my point of view is we're just getting started. And I still have a long way to go to qualify for where we want to be. But rest assured that, as I mentioned in the analogy of the greatest basketball player not to be able to be a good baseball player, we believe an organization needs to learn the muscle memory in order to operate under that kind of scrutiny. And I think Stefan just touched base on some of those complexity. I believe as an organization, you need to build that discipline, build that DNA, And then once you do graduate to the next level, that you earn that respect and you've earned the trust and confidence of the investors.
That's great. I think that the way you summarized it is good. You take your time on the runway, you prepare yourself and slowly execute the strategy. I like the way you use DNA. I think it's great. Before I turn to Laura for a question, I just want to give a quick update that when the company came on OTC QB, there was hardly any trading at all. And here we are, we've seen the local market grow by about 30%. We've seen US activity since a reverse split that occurred in late November, early December 19, that activity in the US is almost nearly balanced. I wouldn't say it's 50-50%, but we're trading year to date probably about $2.5 million US, or about 1 million shares in aggregate, versus the Canadian market, which trade about 1.7. And we've seen a tremendous appreciation in valuation. And that can only happen with more investors. So turning to Laura, Laura, tell me a little bit about what have you taken to reach better exposure to investors to get noticed? You mentioned earlier you took on paid for research, sponsored research, which helped talk about the story. You're developing lines of sell-side research now. And you mentioned earlier to be creative. Can you just share some ideas, things that worked, didn't work, how you would go about to expand the story a little further? And also, while Sebastien is here, I'm sure there was a lot of back and forth of why we should do that, and the board doesn't believe us, and we're spending money, what's happening? Why don't you give us a little bit of the creativity you described in what you mentioned earlier?
I would be happy to. So going back to the time when we first started working with EIQ Solutions, which was about February a year ago, we had to come up with a strategy for how we would reach the right investor. So when I first meet with management about getting fair value for their stock or for their company, getting the right value for their company, we look first at that relative value, the relative value spreadsheet that I showed you, to see, all right, how far do we have to go to achieve our goals in order to be fairly valued? And you have to be really realistic about this. You can look at this on a revenue basis, on an EBITDA basis, but you have to see, what is really realistic for your company based on certain factors with your stock. Then you have to say, all right, what are the right investors for our equity? We want investors that are going to be supportive of management, that understand the transformation that management is going through with the company, that understand, in VIQ's case, AI and SaaS and the transition between one-time revenues to recurring revenues and things like this. So we sort of put that all together, and we came up with a strategy. And let me go back to my, I will share with you my my strategy and talk you through a couple of the different things that we did. So let me show this to you. And just so that the viewers know, just so that the viewers know, we will share this with them at the end of, you'll be able to download this at the end. So a few of the strategies that we took, looking at this story, saying, it's valued at the time, $15–20 million. It should really be in the $40 to $50 million range by the end of 2019. And going into 2020, once we've reported our results, we think we should be more in the $50 to $60 million range. And actually, the company is tracking to that really well. So we did a few things. We improved the messaging and collateral materials for the company. We proactively targeted high quality investors. And this is absolutely critical. If there are, just a couple of things that you remember today, understand what your relative valuation is and where you can, where you are and where you can go, and target the right investors. So that's absolutely critical. And then we implemented, various marketing plans. So let me let me just walk you through a couple of the things that we did, and also put it into context with some of the recent market environment with everything that's gone on with COVID. So what we can see is the US dollar enterprise value is up over 1 year despite the market correction that we had in March. By the end of March, if you do comparison year on year, it was up 75%. Whereas the overall markets, especially in the first part of this year, with COVID, we're down in the 20 to 27% range on a US dollar basis. So the first thing we did was we worked on messaging and materials. So we worked with the management team to really make it more, make the communications pieces more palatable for the retail investor base. Because with microcaps and nanocaps, you're dealing sometimes with less sophisticated investors. You're not dealing with the more traditional institutional investors. So it's easier for them if you can put together materials that are very easy to understand. And then we put together this very high quality targeting list. Now this is interesting when you look at the difference between large caps, mid caps, small caps, nano and micro caps. For VIQ, we actually put together a list of 3,000 targets, which is more than, say, another company that I work with. We have maybe 600 to 700 on the large cap side. But we really had to expand the universe because the investors are smaller. They take smaller positions, and there are a lot more of them. We also looked to, in order to cultivate these high quality investors, we participated in a variety of events, including roadshows and conferences, which helped give us visibility, including, for example, the virtual conference that OTC did and this Planet MicroCap conference. We really prepared for this successful upgrade. I think this may have been one of the big, there was a lot that happened toward the end of last year and going into this year that really helped get us to the next level. So we had to wait for the right time to qualify for the upgrade to the QX. And when we did, we pulled that trigger and we did the reverse split in conjunction with it. And so all in all, that really helped give us access to more market makers like Stefan mentioned, and it gave us, more liquidity in our stock. We tried to increase the visibility from a financial media coverage standpoint by working with the various exchanges who were very helpful in terms of getting us visibility. Also, we got picked up by Seeking Alpha, which actually helped quite a bit. And we started working with more, I would call it traditional media like Bloomberg and BNN or CNN. We've been cultivating high quality sell-side research, so we added paid for research with Zacks. But as I mentioned, more recently, we've been working with non-sponsored research analysts to hopefully pick up coverage over the next 6 months. We expect to have a few new analysts picking up coverage. We did see clear evidence in our equity volume and price. So we saw on the US exchange, as Andy mentioned and Stefan referred to, our volume went up significantly in the US, and it also increased in Canada too. But this was really, in the US, it was a really good thing for us because it's a much bigger capital market here in the United States, and so it allowed us to really access more investors, I would say. And as we mentioned, our valuation increased, and we're set for another year of you know, hopefully getting to the next level, which is 100 million in market capital in enterprise value, or a potential uplisting. So those are the different tactics we took, and it's different for every company. It's really unique, company by company, and I worked hand in glove with Sebastien, and there were many times when the board would come back, or Sebastien would come back and say, well, should we really make this investment? Because I pushed them to invest in certain things that was probably a lot for a company of their size, but you know, I think it did really pay off for us.
Thank you, Laura. That was a great summary in working with a company on the runway to growing like VIQ. I want to just turn over to Stefan for a minute, because we talked a lot about the company. We talked a lot about the challenges. We talked about the creativity and different choices in different markets. OTC Markets offers an aftermarket product through our client services group, the Virtual Investor Conference, which has quite a deep and experienced reach to small retail, family fund, and small institutions, which is a great way to echo the success of a company. But now I want to turn to Stefan now. We're at this point now where the company's trading well. That's got a nice balance between the Toronto book and the US book. The company did a reverse split in December. The way I'm looking at it is they were ready to make that change at that point. A lot of companies do it prematurely. Does that hinder the tradability? The price of the stock now is trading at $2.50, $2.70, $2.80, more or less. It fluctuates a little bit. At this point now, going forward as a market maker, what do you see in the stock in terms of activity, sustainability, and what would you share with the audience as well as with VIQ about things the company can do from a trade perspective?
I would say that it really boils down to timing is everything. When it comes to a reverse split such as this, I mean, timing is everything, because you can only fool some people some of the time, but you can't fool all the people all the time. And people that use the strategy of a reverse split when it's not the right time, it's only a matter of time before the investing public at large realizes, well, wait a minute, there's nothing to substantiate, or there's no rational reason why the company did this. They were poorly advised or whatever it may be. But in this particular case, and again, I don't know any of the particulars, I just know what I see, because in all disclosure, we don't work with VIQ. We are simply a market maker, but we are active in the space, and we have engaged in trades, obviously, with our institutional customers. But clearly, the numbers indicate this was the perfect timing, and it allowed for kind of a segue into a different chapter in the issuer's life, where they were able to take this and really get momentum in the right way. At the end of the day, that I think was probably a big success for you guys, Sebastien, to have that timing work out so well. It allowed for the kind of upgrade to the OTCQX platform from QB. That in itself is part of the narrative that you're telling to investors when you're out on the road talking about the evolution of the company and the development of where you are at the time. Using the Michael Jordan analogy as well, say, listen, we pinpointed the point in our timeline where we thought we had developed the attributes that we needed on where we were as a company to fit this new level of where we're going to be, level of visibility, which would open doors to different investors, different institutions, different possibilities across the board. And so I have to applaud you. Well done. That seemed like it was a major success. And I think QX was a platform that allowed you to broadcast that strategic corporate decision and to get as much return on that investment in that process as you could possibly have done. So well done.
Thank you. Now, as we're approaching the very end of our session, I just want to run through everybody really quickly. Sebastien, if there's anything you could suggest to contemporaries of yours or other CEOs of microcap companies in a minute or so, what would be the 2 or 3 things you would just tell them in closing?
That's a tough one. There's many of those, but the number one thing, and echoing Stefan's point of view, patience is usually not a virtue. It's tough for us as well, but the reality is, Laura just touched base on that. Be realistic, know where you are, do your homework, know the potential value, and as Stefan mentioned, then work backwards from there. And from an execution perspective, knowing that none of this matters if the execution doesn't come in. That's what I was referring to as far as the timing between execution and the company has to perform well. I mean, it took us almost 4 years to set the path for this company to be where we are today. We would have had a very different discussion during that time. So my view is be patient, do your homework. But number 3 is basically go to the process to look for compliance. And whether or not it's QB, whether or not it's QX, whether or not it's something else, my perspective is you need to earn the right to be at the right place at the right time. And that goes a long way in terms of communication. And to Stefan's point, in terms of really communicating to your investors, shareholder base that are really carrying the vote across. Why are we doing that? Why is it important? And to your point, everybody's listening today, there is no way we could have done this without having the earn and the respect of our private investors over the years that really allow us to basically, because ultimately it was a shareholder vote that went to the ballot, and ultimately we needed to rely on that vote, and they gave us that right. And I truly believe that that was an understanding by everybody that the yet is best to come, and that was a necessary step to position the company at the right time.
Thank you. Turning to Laura, as a seasoned IRO advising a microcap company, anything somebody can take away with in a minute or so, 1 or 2 or 3 things to sum up?
Sure. I would just like to reiterate a couple of the things that we discussed today, which is understand your relative value. This is amongst your capital peers. It's not necessarily an exact correlation to your direct competitors. You have to see your company the way investors see you, and that is on a relative basis. Go after the right investors for your story, because that is going to be critical to building a foundation, a solid foundation that supports the further growth of your equity. And then I would say put together a plan. Usually we forecast out 12 to 18 months at least, but these plans take a long time, especially if you're making a major pivot or you're at a transformational moment. So really plan on 12 to 24 months, putting in the work, the time, the money, and so on to let it play out. And that would be my advice.
Thanks. Stefan, from a trading perspective, now that you're trading these securities, any thoughts for issuers such as VIQ or others as they kind of consider the same path in a minute or so, or 2 or 3 bites? Go ahead.
Sure. Well, wearing 2 different hats, I would first say briefly from the advisory standpoint, I would say to an issuer, never discount the importance of having an investor relations plan of attack, because it's a crucial element in the process. But working for a market-making firm, I would say that when it comes to trading, rest assured that the platform that OTC Markets operates is perfectly seamless, and there should be no headaches involved, and it's a tremendously value-added proposition.
I think that's a wrap. I want to thank Sebastien Pare, the CEO of VIQ, an OTCQX listed company. I want to thank Laura Kiernan, the CEO of High Touch, an investor relations advisory firm. I want to thank Stefan Spath, managing director at MicroCap, who is a registered U.S. broker-dealer, OTCQX advisor, and registered market maker. And I want to thank Planet MicroCap for hosting this conference and giving us the platform to speak. Thank you very much.
Thank you all.
Thanks, everyone.
Thank you all again. I really appreciate you joining us for this panel at the Planet MicroCap Showcase Virtual Investor Conference. Please stay safe out there, and wishing you all the best of luck and well.